Okay, sequel to the previous episode of trading, we look at the general overview of crypto portfolio building, and then we talked about wallet navigation and that you expected to do. Now, this is beginner's guide to crypto trading and other related trading as far as trading is concerned. Now, there's what I call ABC and anatomy of trading. ABC and anatomy of trading, or you call it anatomy of trading ABC. Now, the point is this: what am I supposed to do? So take note of the following. Number one, stop being afraid of losing money. That's one of the rules if you want to trade and make money. Number one, remove the fear of losing money from your mind. I'm not talking about putting money in Ponzi scheme now. I'm talking about trading as a career. Remember, we said there are two segments to our platform. Let me quickly show to you. There are two segments to our platform in Plan B. Let me show you to you quickly. These are, where is this? Part one. Sorry, this is, let's take it this way. So the part one is this. The part one, you say Plan B Xpress, anatomy of financial market. Part A is portfolio building, which is the personal investment. So when we talk about investment, it's not about those funny scheme, you give them money, they pay you percentage. No, personal investment is that you buy by yourself, you monitor, you are in business, it's your business, okay? So we are not we don't do all of those investment scheme of bring your money. So portfolio building is one of the major aspects what Plan B depends on. So now this got the area of number one, primary coins holding, that you buy a coin and hold it, and then when it's profitable, and that's where we targeted cycle. Understand, I talk about cycle, 4-year cycle. We buy at the bear market and sell at the bull market. That's the essence of portfolio. So in other words, when it's a bear market, you don't bother yourself of what's happening. You only buy. So we're always looking for buying opportunity at the bear market. That's the whole essence about this. Number one, primary coins holding. You just buy coin and hold it. Or some low gem too, where we get it, if you can be heard. But to just know that the first thing is to buy and hold coin. Now, next is staking. From some of the coin we buy, and then we are holding it. If you have a place where it can be staked, we stake it as well. Then farming is still the same thing, all right? There are some segments you need to match the coin together and go into the farming. Swinging, please, there's difference between this swing and the normal trade swinging. This portfolio swinging, all right? This swinging is called portfolio swinging. I will explain to you. Portfolio swinging. How does portfolio swinging actually work? Portfolio swinging work this way. Example, let me make example like this. I can have like, let's say, let me list this 5 coin. SOL, Atom, all right, ADA, all right, BNB, okay, BNB, all right, INJ, okay. So which other one? The ecosystem, ETH, okay. All right, ETH, even BTC itself, another related coin. Now, this could be part of my portfolio. Now, how do I swing it? Now, I'm going to be swinging it on when there's a major reversal. So in other words, I'll be viewing the market in weekly, monthly, and daily time frame. So when there's going to be a major reversal of the market, I could sell part of it, and then, but in other words, these tokens, I'm buying them back. That is called portfolio swinging. So when I sell them, probably maybe I notice that the market is going to retrace by 50% or 30% or 20%, which is major, for instance. I could sell, and then when it retraces and returning back, I will buy back. That's portfolio swinging. So it's different from swing trade. So we're going to go to that. So swing trade is that you want to just make money, but here you want to increase your portfolio holding until when the bull market comes, you sell off and then wait for another bear market. So we have low gems pump hunt, and then both trading, portfolio management. This we use both on trading boats, e.g. Tree Commerce, or like the exchange trading boat, which is free, like OKS and the like. Validated airdrops. Now, this airdrop that we do, you buy some coin and they ask you to stake or swap, which is called interactive. You swap, you move, and they say for you to qualify for some of those airdrops. And that whole essence of validated airdrop. Okay, somebody is catching the truth. Okay, so very simple. You want to do airdrop. You want to make sure that you have, you want to make sure that you have a wallet, but the tokens, so they are not free. So when you are doing validated airdrop, it's not a free transaction. Okay, that's why we always tell people it's not the usual testnet people do. This is you buy into it or you hold an asset, then that you can do. Then stock diversification, both local and international stock. So we could buy and just hold as a part of portfolio. Now, the second place is called the cash flow system and ABC of trading. So we have 4 segments of this trading. Number one is called, Number one is called mainstream and low gems trade, spot trading. Now, mainstreams meaning those coins, all right? Those coins, let's go here. All right, so those coins that you can buy, like these tokens now. So we go there and swing, all right? We only go there, probably we scalp it or swing it. I'm going to explain to you all of this. Then we have futures trading. So you want to trade future, that is to enter long or short the trade. Then we have synthetic trading. Then we have FX and indices trading. So indices like the stock that are traded as an index on the MT5 and all the like. So these are 4 segments of, we call it cash flow, where you can hustle. Other thing you can trade, you know, we have NFT trading, you know, we have so many other type of trades. So, but these are major, okay? These are major that you want to build a career around, you can build around all of these things. So these are major. Now let's quickly look at it. So first rule is that stop being afraid of losing money, get rid of your emotions, stop being too smart, stop being too careful. As long as you want to trade and make money, don't entertain fear, erase it, and face your fraud. It's very important, okay? Just a moment. Okay, so let fear be gone. Secondly, understand that crypto is less technical than FX and other market. So technical aspect of crypto, yes, there are, but you have to pay attention to fundamentals as well. So fundamental and sentimental have a lot of influence on crypto. So if you are trading crypto, understand that it's not really technical. However, the technical will play out, but it can be affected for a time. So you have to balance the equation. All right. So then we have FX. So like in crypto, only have pump point abnormally. So that you need to understand when a hype is happening, how to leverage on the hypes are very important. Okay. And those are the things that you need. You need more deeper knowledge. You have to go enroll in Plan B to understand all of those fundamental, sentimental trading and technical aspect. So FX is not a guesswork, but a more disciplined approach. So in forex trading, you have to master both the technical and the fundamental. So you are going into FX, just understand those things. Then FX is a hybrid analysis that depend both on fundamentals and technicals. Get this, you can snapshot it to take note of it. Synthetic market is purely market structure and algorithm. So in other words, I can trade synthetics just facing the market structure and checking the algorithm. So there's what called algorithm. So with that, that means I can use some tools, combine algorithm and work out some algorithm when the market follow this, use this and all of that. So you can purely trade that on tool. So you have no fundamental on synthetic. So understand it. Then the trading tools that you would need to trade. We need broker for like synthetics and forex. Then you need exchange for crypto. I've mentioned that in the previous video. Wallets, news platform, market analysis platform like TradingView. All right. And so then choose trading instrument. I always tell people, you want to trade forex, for instance, I normally choose maybe Euro USD, GBP USD, right? They're okay for you. All right. Now for me, I trade maybe few instruments, or I just want to move around. If I scalper, well, you just maximum instrument you should be always targeting to analyze should be 5, but trade 1 at a time, right? Or maximum 2 at a time. So it will help you to make good result. All right. Then in synthetics, you can trade it out. You want to face boom or you want to face VIX. And if you want to face VIX, V75 may be better for you because it has a very good volume. And then if you want to trade boom for as a beginner, you have to trade boom 1000 and you can monitor and trade that. Now, as a beginner, it's better you trade coins that are primary coin like BTC, Solana, Ethereum, and all the like, so that you'll be able to master your trading activities. Choose a trading strategy. Are you a day trading or you are a swing trader or a position trader? Like 15 minutes for day trader, and then 1 hour, 4 hours to swing trader, while daily and weekly time frame for a position trader. A position trader like now, we bought some tokens since October, and it was when Bitcoin was crashing down a little, we sell to buy back. That's a swing trader. So that's a position trader. So you are not rushing, and then you are always targeting the major point. So stop searching for too many strategy on YouTube. Rather, work on yourself with a simple strategy, rules for entry, exit, how much to use for your stop loss, and how much to actually to target for taking profit. So go for more training, either basic mastery or advanced mastery with Plan B Xpress. So that's going to help you. Now, these are exchanges you can have, OKS, MSC, Bings, all right? All of these things, you can find it. I think I'm going to add it up for you to start your trading, okay? Now, like TradingView, they are important so that you can. So, but these exchanges are very okay for you to start trading and all of that. So let me quickly go into one example. So now, assuming you want to start trading, assuming you want to trade, first thing, now I call it the ABC of trading. Let this thing be in your mind. The ABC of trading is this. What are the ABC of trading? So remember, I've just mentioned few positions, spots, both for low gem and mainstream, for scalping or swinging, then future trading, synthetic trading, and FX. So one, we have the ABC of trading. ABC of trading. Understand these four things should be in your mind. Why? Okay. What? Okay. When? And how should be your guide. Why am I trading? To make profit. So perfect strategy that make you make profit. Why am I trading? That's the reason for trading, to make profit. Okay. Now, when you are making profits, if it's like the crypto now, this trade, am I trading to make profit in fiat, or am I trading to accumulate more of the coin? You have to define every time. And the why, you create a lot of things for yourself, and then you follow your why very well. So it's not about the professional, this thing. You want to learn more about basic, what is Forex, what is crypto, when was it invented? Then we have information for that. But I've seen people who know all of those and they are not profitable. So you want to be profitable. So what should I trade? Okay, that would now come to, okay, I want to trade only low gems and spot trading. Oh, I want to trade futures. Okay, I want to trade synthetics. I want to trade FX. Now, maximum, maybe you are a very professional. If you are not a trainer, you don't need to bamboozle yourself with too many things. In fact, it's still better when you are in the FX, you can trade synthetics and FX, but you can make one to be your major, maybe synthetic your major, occasionally when you have time or opportunity come out to trade FX. If you want to trade futures very well, and then you probably, so all of these will help you to build your portfolio. So understand this. This is cash flow system to help you to what? To build your portfolio, because this will not take your time. You just buy into it, hold it, and then stake it and all that. This wouldn't take your time, but you need information platform. This is informational based. And that's why private mentorship is the major place where you can have this. You have in private mentorship or our Build With Me premium group. So in private mentorship, right? Private mentorship, okay? Private mentorship and Build With Me premium. Okay? Private mentorship and Build With Me premium. This costs you $5,000, one-off a lifetime. Why this one costs you $1,500 yearly? Okay? So now that we can have access to all of this, and then where to farm, where to stake, and all of that. So now let's go. When should I trade? There are conditions that should be met. So what should I trade is that, why am I trading? Right? The simple direct answer is that for profit. For profit. That's why I'm trading. All right? So profit could be in asset or in fiat. Profit in asset or in fiat. That's why you are trading. So any other thing apart from this, you are not trading to prove to anybody that you are a professional trader. No, 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 no. Don't do that. It's trying to make people know that you are a no, you don't need it. Why am I trading for profit? Simple. And so when that consciousness is you, but you understand that definitely, if I'm trading, I can make loss. That's where you have to learn about what we call risk management. These are advanced mastery. We have basic mastery and we have advanced mastery. Learning about strong risk management, and all of those things, money management, and the psychology is more advanced, okay? Now, what should I trade? That will now tell you which instrument. So instrument, okay? Instrument, all right? Or market and instrument. So call it market and instrument. Market and instrument. So you tell yourself, man, I want to trade forex. I want to trade future, crypto. I want to trade synthetics. And even in synthetics, I want to trade V75. I want to trade boom 1000. I want to trade boom 300 in that order. So you must define all of this. Then when should I trade? There are three places of trade. Now, when you talk about when should I trade, there are three things about it. Number one is that when should I trade? You have to define setting your time, all right? Setting your time and the type of trade you want to trade. Setting your time. Okay, every day I will trade. Every day I will trade, and I will trade for how many hours from so time. Like if you are trading for, I always tell people, Friday and Monday should not be a day you always trade. Your trading should be within maybe Tuesday, Wednesday, and Thursday. Reason, Monday, there seems not to be enough volume. It's more by manipulated markets and all of that. So I may not trade that. So you have to define when you want to trade. And so, it's your career. You tell your resume. And if you must trade every day, like in synthetic, you trade every day, you have to define the time you want to trade. Are you the type, you are working, you are so busy, you will trade in the night? So it could be from hour of 1 a.m. to 6 a.m. in the morning if you are trading crypto futures and all of that. Or, just define when do I want to trade? When do I want to trade? Okay. So now this when spilled, so timing, talk about timing, and of course align with timing and it's more of timing. Okay, when should I trade? Okay, and then timing and conditions. So these conditions, so this is what splits to this how. So this how and when and how are actually one. So the how is not of timing, but is talking of conditions alone. Conditions alone. So now this has to do with which confluence are meant to be met before I will enter. Okay? Okay? What conditions are meant to be met? Okay, when the market go this way, when the market go this way. So there are conditions. That's why the condition is still applicable here. There are three major conditions I always identify. Three major conditions. Okay? So how to now enter? There are three major conditions of entry. Three major conditions for market entry. Okay? So the first condition is, look at it. The first condition is at reversal. At reversal and confirmation. All right? At pullback and confirmation. Third, at breakout and confirmation. You get these three. Reversal point and confirmation, meaning when the market reverses and confirm that the market is changing, it has confirmed. And this, we use what we call simple 1, 2, 3. Simple 1, 2, 3. And then extended by 4. All right? Where you have a line crossing, I'm going to use it to show you on the trading view. Then here, pullback. So we can use another tool like fib retracement. Fib retracement. All right, another tools like market pullback, so which you are going to be hearing a lot. HH, right, higher high and higher low, HH and HL, or low H, LL, and LH, something like that. So now you want to see a market, a pullback. So that means this pullback is actually what we call trend trading. Trend trading. trend trading. Okay, trend trading. So then breakout. So breakout, it sometimes can be a reversal or a kind of pullback to readjust again, but you can catch it. Okay, so this is more or less of like a channel. So in a channel. Okay, enough of the story. So you have seen it. These are basic anatomy of trading. So let's go. Now I'm going to log in. So let's look at first thing you need. We have talked about what you need. You need exchange, you need brokers, then you need wallet and all of that. So now, how do I trade? So let's go. How do I trade? I'm going to go to, let me enable this, connect. So I'm going to go to an exchange now. So simple thing to do. I want to trade, okay? I'm going to go to an exchange. Now, but first, I will have what we call trading view, okay? I need to have trading view. Right? Even on the exchange platform, you can see a trading view chart or pattern on your exchange platform. So, but to still support you and to help you, you need an exchange platform. You need a trading view. It's free. You are not charged to use it. It's free. So let's quickly look at, this is trading view. So, but I need to open another one because this is my own, right? I need to open, to just go to another portal to show you properly. Okay, so let's go to a page here. So trading view. Okay. So let's go to trading view. Okay. So this is trading view. Trading view. Oh, so now I'm going to trading view. What exactly am I looking? Now you are trading crypto, either spot, futures, whichever one. Now understand this on your trading view. On your trading view, what you want to do is very simple. On your trading view, there are 3 segments. So if you are a position trader, you want to always work with daily time frame and weekly time frame. That is, you buy and hold for a long time, more than 3 months, 6 months, or depending on when market has given a particular direction, then you want to find an entry. So let's see. I think the page is opening. Okay. So trading view. All right, let's go. Trading view, trading view. Okay, here is trading view. I told you a link was sent to you. If you check below, you're going to see those links, and then just click. Make sure you log into your email, especially your Gmail on your browser you want to use for your trading view. Very simple, okay? So now, this is trading view, where you check some technical movement of your market. So by the time you open it, it's going to show you to get started, okay? You can just sign up, use your email and sign up and all of that. So after you sign up, where do I go? Look at this menu. Click on this menu like this. So I'm clicking on this menu. It's going to show different. So, but in this my own, I've already used it. So when I open, it's going to open the chart properly. So let's go. Can we do this? Network is somehow funny. So I click on menu, and then this is product. I click on product and click on super chart. So we want to open the chart. Okay, very simple. I'm not teaching you technical analysis, but just simple view. Okay, just simple view. I'm not teaching you technical analysis because this is just an intro and basics for buy and selling. Remember, as a trader, you need an exchange for your crypto, either for spot trading or future trading, respective of the type of trading you want to do. Okay, so I just want to do an overview for you to understand. Then you are trading future, you're trading Forex or indices, right? Or synthetics. I will still show you other things you're going to need. Okay, so this guy is opening. This is trading view. I've had this mine. That's why you see it's opening like this, and we could have this. Okay, so in your trading view, there's something I want you to have. Every time I would love you to have what we call DXY to be available on your trading view. This trading view is opening. Let's take this. Just a moment. Okay, let's go. Sorry. Let's just take this guy off first. Let me refresh. Trading views opening. Okay. Okay, now there's something I want to just show you basically. You need more knowledge. You have to, probably enroll in Plan B Express properly. We have basic mastery and advanced mastery. Now, you can see this trading view. Let me show you something. You want to trade very simple, either you're a day trader and all of that. Two things are going to help you. Very simple. Two things are going to help you. So I'm not going detail of trading here, okay? So when you open this chart, ordinarily it won't show like this. Let me take up this guy. Let me take off this guy and this guy. So let me add this guy, volume. By default, it comes with trading view. Okay, so you're going to have something like this. Let me go on daily time frame. Okay. Maybe you have something like this. Okay. So maybe you have something like this. Now, this is what to do. This is trading view. Now, ordinarily, as a trader, you will have list of tokens or asset or instrument you want to trade. Now, if you click here, look at this. Can you see this watch list? You see a plus sign. So click on this plus sign, it will show you area of things. Stock, fund, futures, forex, crypto, indices, and the like. Now, ordinarily, if I want to do now, I can put list of things I want to be trading. Okay? So if you look at this, there's some watch list here. So I may just take them off so that we can add them from the beginning. Let me take off this. Let me just take off everything. Okay? Take off everything. So nothing is here. Everywhere is empty. Look at it. Everywhere is empty. Can you see? Seems that you didn't have any symbol, the watch list. You can add symbols, all right? So nothing is here. Nothing is here. So what you do is just to come here, this plus sign. Now, instead of clicking all, I will select them one after the other. The first I would just want to add to be on general is DXY. That is what? US dollar currency index. All right, US dollar currency index. So I will add it. So you can see the US index already added. So I will go to this and I'll pick, so crypto is the first I want to add. I'll click on crypto. So perhaps you add crypto, Bitcoin, okay? So you look for Ethereum, so like Solana, I add Solana. Just click on this plus sign, add Ethereum, okay? So I've had Solana, I've had Ethereum. So Avas, okay? I add Avas, I add MATIC. Just doing a practical example for you. I add BNB, right? I add FET. So other ones I may have to search for them. When token. These are like men. So when, okay, I add pop cards. These are mem for in case of those of us who may want to trade mem. So I add okay, I add bonk. Here is bonk. Okay. So I add let's say DOGE or Shiba. Sheep. So this is Shiba Inu. So I'm done. Now, can you see? Can you see them now? I've added them here. Okay. Now, if I want to add another one, I can go to Forex. I'll add Euro USD. Euro USD. I can add GBP USD. Okay. Then I can add gold and oil. Gold is XAU. So you may have to take me to indexes. Gold, or is in the, okay, gold should be in category of futures. If you cannot, it's not giving you, just go to all. Here is gold spots. So I add gold, US oil, that's wheaty. So I'm just adding gold as an indices, right? US oil, or what we call wheaty. It's taking my time. So enough. So can you see? I've added gold. I've added Euro USD. I've added okay, guys, sorry, in breaking transmission. So breaking transmission. So we say we add all of those. So I can add oil, that is US oil, right? US oil, or you can search for wheaty. Wheaty, US oil, wheaty. Okay, can you see this US oil? Okay. So I've added all of this. Now, very simple. So what I need to do, you want to learn more about setting up your trading view, and of course, that's another training on its own. So, but I'm just giving you basics. Now, if you look at the market now, you see how red they are. Now, the next actually you need for crypto is the coin aggregator, which is like what we call the coin gecko and not the like. So very simple. So what am I expected to do? So I need to log in to an exchange. So let me quickly log into an exchange. So I need to log into an exchange, connect this guy. I need to log into an exchange. So I'm going to use MS Global as an example. Next. So you can do spot trading, you can do future trading. So I want to use, okay. Yes. So let me refresh this. I think I logged in previously, if I've not been logged out anyway. Okay, so let's go. Okay, so fantastic. So we're good to go. So let me just show us here. Let me go to this page. So here we go. A very quick one. So here, this is MSC, right? This is MSC, and you want to trade. Very simple, okay? This MSC, you want to trade. We came in the morning, we did the previous this thing, we went to spot. So if you have your phone, it's easy, just download the app. So went to spot, all right, to trade. Okay? So very simple, right? Now this is spot. And what we actually bought in the morning, in the previous narration, was when. That's the when that you still see that's there now. We bought when, and we play when for sale. You can see now when was placed for sale. It's still there. All right. So it should say when for us. All right. So when placed for sale. So they're just there. So now the simple thing is this. Now I want to trade when. So, but there's something I need to do is to go to my trading view. So I'm going to search for a token called when. Right? In your trading view, there are a whole lot of things you need to set. So, but I want to take this guy off. Look at it. Hover your cursor on your trading view. Take your cursor, hover it around this. So you see this close sign. Remove. I take it off. So I want to construct to my own. So if I want to trade when now, I need to go and look at it on top here where you see this US 30. So I click. All right? And then I will type the name. Don't erase this US 30. Don't try to erase it. Just type. I type when. W-E-N. So this is when. And then you see that it's in different exchange. It's on MS Global. It's on KuCoin. So I will just select anyone. So mostly anyone that is on Binance, we normally use on Binance. Okay. So this is when. I've clicked on when. Look at it now. On daily time frame, look at when. When went up very well now and came down crazily. So for people who are investor, position trader, maybe you are bought when from where it was here as at February 27th, and when went up crazily. So let's look at it from February 27th or so from here, when went up and did over 330%. Let's call it that way. So when that's had a double top, because if you look at my line chart here, so this is a double top. Can you see? Line chart give you more of, so this is a double top. So I already said okay, when has a double top, okay? So go to candle. So when has a double top, you probably want to sell. So if I see that, maybe I'll go to 4 hours because and then to now sell when. After selling when, I want to look at where I can buy when back, okay? That's why you're using your chart. Now you can see when it's trying to recover from where it is. But on a higher time frame, you want to see that this is what we call 1, 2, 3 pattern. 1, 2, 3. That means when may still come down below to about 20. And then when come down below at 20 and now returning back, you want to buy when because you know it's going to go up. Okay, that's one of the things I was explaining. So, but this is higher time frame. As an investor, you are buying for a long time and hold. But remember, this is just a meme coin. It's not old coin. So if it was something like Ethereum, so let me quickly click on Ethereum. Can you see? Look at Ethereum, right? Ethereum. So for somebody who bought Ethereum since last year, no, not this last year. This is February. Are we correct? Yeah, this is February. Ethereum as at February was about $2,300 and something dollars. And you have bought Ethereum, right? From there. And Ethereum went up. So as it was going up this way, okay? So let's say on Ethereum, you have bought from here, and over here, you have done about 68%. Now, Ethereum start changing direction, all right? Stop over here, and you are having a kind of bearish engulfing candle. Then you want to sell and watch where Ethereum will stop over. Now, tentatively, we wanted the Ethereum, look at it, this daily time frame. You are finding another support here because if you look at the trend of Ethereum, so let me go to a line chart, you can see that this was an impulse move, a stopover, jump up, and all of that. So all these points are meant to be resistance, 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 resistance. Now, when it was coming down, become a support, support, support. Now, you look at Ethereum, probably you can say Ethereum may come down to $3,015. It currently came down there, $3,015, which was resistance before becoming support. And then you want to start ladder buying. Okay, that's a topic for another day, the way we ladder buy into the market. Okay, so now, having seen that, okay, that's what Ethereum is doing. I'm just using this as an example. Okay, the same thing Solana did. Okay, if I look at it now, let me go to line chart. We don't want to struggle to see those points. This is a point. So this is a what? This is a pullback, continuation, pullback, continuation. So this can become a support, resistance, and once you break the resistance, it's going up, and then over again. This is the last high. So at this last high, 202, or let's say because of there's a week above, 202 become the last high, which become a resistance over time now. As Solana was going now, it's expected that when Solana gets up here, it's either a break it forcibly or get rejected and it will come down again. And you are looking at where is the next support. Those are the things we do in the market. So let me quickly do something, how to, come into a trade. So this is TradingView, okay? It's free for you. So there are two things I probably will add on TradingView for you to use for your trading. There are two things I'll add on TradingView to help you. Number one, I'll add what we call MACD. So go to your indicator and search for MACD. Just type it, MACD. That's called moving average convergence divergence. Add it to your chart. And then next is to head on to what we call 10 in 1. 10 in 1 moving average. Add it. 10 in 1 moving average. Just add it. So these two are okay. You cannot even have more than these two. That's a challenge, okay? So now, what you want to set is very simple. If you like, you can use the MACD like this. So for you that want to trade small scalping, so if you are scalping, first hour you go to is 1 hour. If you are scalping, we call it time synchronization. If you are scalping, first of all, go to 1 hour. So let's go. Now, there are settings you need to do to this 3 in 1. So head on there, come down here, click on this line for setting. I want to do the setting, network. So now go to input. So select this, up to 4. Right? This one is already 200. Change this one to 50. So change this one to 50. And then change this one to 800. All right? So change that one to 800 and change this one to 10. So all these EMA, change them to be EMA. Change this one to EMA. So this one, change it to, it's EMA. Now, all of this, normal. But this 10, change it to HF4. Look at it, change it to this. Now, the color, you're going to change the color. This one is red. This one is green. You can choose the color you want anyway. This one is black. While this one is gold. Okay? Or you can make it blue, anything you want. Right? So you go to style and make them thicker. So I always love it thicker to be able to see what I'm doing properly. So just watch what I'm doing to change what you want. So the last one is the 4th one. Click OK. Have you seen this? There are some tools I'm going to give to us, but it may not be for us now. It may be for if you're in the mastery class. So this one, I'm going to remove this. Remove this, let it not show on the label. Okay? So you have two choices to make. You can either use your MACD like this, or you change it to the type of MACD I love. So if you want to use your MACD like this, you want to trade when the MACD has a cross. So why do I come to 1 hour first? I want to come to 1 hour to see the market proper, to see if it's trending, which trend, is it trending up or down? Now, if you look at this now, the market is actually going down. So that means I want to find a short, because if you look at your MACD, it's even showing a cross of MACD. Now, there are three contents of MACD. There's a histogram, there is signal line, there's MACD line. When the MACD line crosses the signal line above, it's tend to say the market is bullish. And when there's a cross of the MACD line below the signal line, it's tend to be the market is bearish. Okay? And then, of course, you want to check, is it as a cross? After the cross, do we have volumes in the histogram? And that's already what happened here. All right? Here too, you see that the histogram changed to red and even below the zero line. So you tend to say this. Okay, so now, and if I want to trade this, if I cannot find a very good structure for this, I can change to another market. So let's go to the when and say it's still going to come down. Okay, so if you look at it literally, when it's bearish, do we see that? How do we know it's bearish? Let me show you. This is 1 hour time frame. Am I correct? Now, in 1 hour time frame, when has gone up to as much as 40, right up here, and then the market has crashed down. If you look at your MACD, let's look at it. Your MACD all this while, there have been a cross and down, cross and down. But what happened? The cross and down since, for the first time since, let's look at it. After this crossover, let's look at it. 43 or so. After this crossover, since on the 9th of March, there hasn't been crossover above. Okay, there's another crossover here above this zero line. But this is, look at this. This was on the 14th, right? From the 14th to today is 21st. We have not had a crossover above the zero line only this season. So it is tend to say, okay, the market is actually trying to go up. So, but look at what happened. Now, why do you use your moving average? So your moving average will help you to identify the trend, even when you do not know how to set the trend by yourself. So look at it. I've seen the market now. Look at when it was bullish and all of that. So you want to now take trade ordinarily. I will tell friends, any market below 200 moving average is bearish and looking for sell opportunity if you are a future trader. So for instance, the market when it was here, and then they will have a cross of 50 below 200, that's a sell. When it rally back to 50 or even to 200, 200 will become a resistance, get rejected, you are selling again. Another one. Now, this is rejected. This is another selling opportunity. Do you see it now? So that means this market is still bearish. No, now, so we are going to go to lower time frame. So you can go to 15 minutes or 5 minutes. So let's look at 15 minutes, where you can find entry. Oh, good. So now, look at 15 minutes. Look at 15 minutes. So what exactly do you want to do with your 15-minute time frame? So now, if I look at this market, okay, now it's somehow confusing, right? Because this is just like a sideways move and all of that. You will look at, okay, if I had come earlier, so I will have found an entry, look at it here. Sometimes you have to be careful. When the MACD even cross, we can have what we call divergence, right? So, but after this cross, if you want to silence the MACD, you can double click, okay? So let's expand this thing so that we can see it properly. Okay. Okay. So now look at the charts at the cross of, so not to disturb yourself, this 15-minute time frame, and this was on the 18th. Now you can see the market cross, and that was a massive sell down at about 36% drop, right? At about 36% drop. That was a massive drop, right? Now, if you are a future trader, those are the trade you are taking, because now let's enable MACD. So you can see the MACD cross. Can you see the MACD cross? Now, no, there was a cross here. Do you see a cross here? There was a cross here, but look at your trend line. Your trend line still say, man, even though there's a cross here, the market is still a downtrend. So you may not pay so much attention to this. This is just a pullback and rejected again, but it became more serious. Now, this is, let me show you something very, very, very important. Right? So let me show you something. There was a cross here. Look at it. There was a cross here. Let's see. MACD was recording higher high, while the price action was recording what? Higher low or lower low, sorry. Now, this is what we call divergence. Look at it, divergence. Market is facing another place, but the MACD, the volume momentum is telling you that the market is adding more volume. Now, that means there's a pending reversal. And after what happened, we have the reversal happen here. But even upon this reversal, you see how it got rejected at 200 moving average and to about 800 moving average. So at that point, you have taken some trade and you want to close the trade at that point, and then another cross. See, this is a cross. Not all cross you take so seriously because you need to pay attention to your price action. Now, after this cross, you can see the massive sell downward here. MACD is crossing. Now, in my own case, in order not for me not to be too confused with all this cross and cross all the time, I definitely do something. I come here and change this thing. Look at what I do. Click here. Now remove this histogram. And I come here and change it to columns. Right? I can change this color to any color I like. So I love this more deeper color. So I take off this guy. Take off this guy. So it saved me from unnecessary cross. So as long as this guy is concerned, this is a cross, right? And I see that the market is still, I'm not going to take this guy serious unless I see there's a cross above the zero. So look at it. Above the zero, there was a sell, but you know, this is a bear market. And then there was a cross down again. That's the major cross. So I take it more serious with all this major cross. This is, if you check, let me swap it this way so that you can see it properly. So you can see that the market actually, you can trade. So because, you know, this is a meme coin. So you should understand the percentage. This is bearish engulfing. Look at it. It's already 12%. For the people who are trading future, it's already some reasonable money. Now, there was a cross here now, and then this one is still pending to drop, as it were. So sometimes when you don't find a structure on time, I always can change to another market so that I can find a more beautiful structure, as it were. Okay, look at this is Bitcoin. It show like, okay, I'm going to crash and all of that. So now this is 15-minute time frame. So you can be using 15-minute time frame every time the market crosses above 200 moving average. You are looking for a buy opportunity. All right. Now look at your MACD. Look at it. After this, there's a cross here. After this cross, now you can see your 10 EMA crosses 50. As it cross, you bought. Now there was a slap down here. And now if you are following the market, you may not bother so much. Because when you enter here, you are taking your stop loss down here. For instance, if I'm entering, this is BTC, and then I take risk-reward ratio to long. You are longing BTC from here. This is too big for you. This is too big for you. So 3% to make 6%, is it going to work? Okay, it works. I always say, as a beginner, use 1 ratio, 2 risk-reward ratio. Okay? So 1 ratio, 2 risk-reward ratio. So you say, I will lose 3% or 3.something% to gain 6.something%. Now listen, now this is why if you are trading future, I always tell you as a beginner, use maximum of 5x. If not, use 3x. So 3 times 3 is 9%. So you can lose 9% of your $50 that you put into the market. But those people using 20x, 100x, and all of that, that means you have to go to a more lower time frame. You have to go to like 5-minute time frame. But the more lower time frame you go to, the more risky your market can be. So let's look at 5-minute lower time frame. So 5-minute time frame. So now this is a cross, and this is a cross. For instance, of course, before here, I will have entered. The moment the market has crossed the 10 moving average, I'm finding an entry. Perhaps where you see multiple weeks, a place you see a multiple weeks, look at it, this is a multiple weeks, and then it got engulfed. I'm finding an entry. And so with that, look at this. So I found an entry here. So my stop loss is here, below this. I might take profit. 1:2 risk reward. So let's take it up. So this is your selling point. Okay. 1:2 risk reward. So you can easily catch whatever thing you want to catch. 1.3 to catch 2.8 something and all of that. So you have found an entry. And so for the people trading now, so look at another one. There's all of this one. Market crosses down again and then start jumping up. So now this is 200 moving average. It has crossed before. It broke down. You're watching. This is, you can let all of this candle over time. Now, this MACD cross. So this is a cross, right? And engulf. So you are entering another position here. You can see why I always tell people, don't trade too many instruments. If not, you will not be able to master the market properly. So it's possible you are entering the market here. So this one, the stop loss is too big. This is about 2 point something, almost 3%. That's too big. So, but however, 1:2 risk reward. Let's go. So here is 1:2 risk reward. All right, 1:2 risk reward. You have won. You have made the profits. Then you are fine. That means about how many percent? That's about 6.17%. And you use, let's say, 3x or 5x. So if it's 5x, 6 times 5 is 30%. You have done 30% and you are okay. It's better you take your trade over and again and you win over and again than trying to win at a go. Now, this is another market that is a little bit dicey. So if I were you, I want to wait to see that this market crosses above 50 and then this volume, because this is a weak volume, right? This volume is so weak and then it can be very, very delicate. Trying to long it, it could break down the market and change the whole thing. So now, so that's how I thought we were going to find any coin that I could trade. Let me check Aptos, APT. It's a token that nobody talks about for a while. Okay, APT. So all coins are even trying to. So can you see now? Look at APT ordinarily. If you are there, it has crossed below 10 moving average. So you are looking for a short position. I need to find a market for you guys so that, oh, sorry. Okay. 1:2 risk reward. It's already 2. So it's already sold, right? So there are cases that make you to ride the market and then extending your risk reward if not. So now the market got down here. What happened? This is a kind of reversal. The MACD cross and building volume. Now, when you take this out, trade can be very risky. You can see it was so slow. And now this, okay. What other coin was I checking? So let me look at FTM. For the purpose of this class, the market is very, very, very dicey. Oh, we have had a very great pump. Okay, so but let's experiment. So let's go FTM. You know, I can't just find any coin, and so that's what's disturbing me now. So let's go to this place, and we're going to do FTM. Right. So now, sports, you can buy in sports. So in sport, look at it. This is sport. Now, if you go to my wallet, you know that you have money in your wallet. So I want to buy FTM. So I search for what? FTM. Here you see FTM USDT. Yes, I want to buy. So you come up here. FTM USDT. Yes, I want to buy. Now, this is the rule. Now, I want to buy FTM USDT. Okay? So let's buy FTM USDT, maybe worth of $20. Right? At what price? Now, this is where you now have to adjust if you're adjusting your price by yourself or you just want to buy at the market prevailing price. So for the purpose of this class, let's just use the market price. And then I want to buy worth of, let's say $15 because I want to do some experiment. Okay, $15. So I click on what? Buy. Then buy. Now, the price is set, but it has not given me because the price has just passed my, okay, it has bought now. See, 14.12 FTM. Now, there's something you now need to do. So I haven't bought. If you look at it, let's go to our chart. So look at FTM. Look at the previous high of FTM. It's at the 1.1382, 1.1339. So I may set my market there that I want to sell when it get there. Okay. So FTM, I have bought already. Okay. After we bought, the price have left where we bought. So I now say I want to sell at 1.1392. Okay. Everything, no, 50% of what I bought. I click on what? Sell. You say, okay, sell. That's it plays, and that is, maybe I just want to be scalping. The next I want to do is I go to my wallet, all right? I go to my wallet, click on spot. So I'm going to send money from my spot wallet, all right, to my future. So you can transfer, you can see transfer from what? From spot to futures. So how much do I want to send? Let's say $50. So I send $50 to the place, click on transfer. Okay, now for the purpose of this training, so I'm going to go to future account. So this is future. I go to futures. Here we are, futures. Please take note of something. Now in future, there are strategies we use, of course, that will make you undergo training. But it's very simple. Now, future is more risky. Now, where I warn people when you are trading future is this. How do I set up my future trading account? Very simple, okay? Very simple. Number one, what do you want to trade? Okay, number one, what do you want to trade? Let me just remove all these things. Okay, number one, what do you want to trade? So what you want to do is very, very important. So I want to trade FTM. Remember, I want to trade FTM. So I'm going to go to FTM. So I click to search for FTM. FTM. Okay, I click on FTM, perpetual. So FTM perpetual, yes. Okay, what do I do next? I want to go to what we call the setting of my trade. And the first thing I want to check is what we call the type of leverage. Is it isolated or cross? You want to learn more about isolated. Isolated is that the money I assign. Cross is that use the whole money. So if the market is going down, you will still be in the market, but it's already entering your money. So isolated is recommended for beginner. Now, and I told you want to use the size of your leverage. Maximum I recommend for beginner is 5, if not 3. So, but in my case, I will use 10 now to just experiment this. I will use 10. Look at it, I'm adjusting it, 10. You can manually type it. Look at it, I type it, 10. 10x, I click on confirm. So you have to do all of this setting first. Now, having done that, and I want to go, how much do I want to allocate? So if I allocate, look at it, 25% of this money here, 25% of $121, look at what it's saying. He said, you are longing this. I say, yes, buy at this price. Okay. Now, there's something he was going to tell me, cost. There's a place it will show you cost. Okay. So I want to enter now. Don't use market price. I don't like people using market price. Use limit order so that you can place your own price you want. So I'm placing my own price. You know, this is risky because the market is not even going up. and then we couldn't do proper analysis. So 59, okay, 1.0590 is the price I'm setting. Now, okay, is the price I'm setting. And I say 25% of my money, okay, 26%. No, 20%. 20% of my money. Okay? I see it's still going down. 20% of my money. You know why? Because this is a continuation of downward trend. So that's why, I was showing you on the chart. If you go back to the chart now, you're going to see what we're explaining here. Can you see? Can you see now? So the market is, because you try to avoid a market that is not trending. Look at it. So you try, and this is a confused market. So eventually you're going to still have this continue to dump. So let's just do small experimentation just because of this training. Okay. Let's go. Just because of this training, we may lose, no problem, but it's a training. So I change, I say 59, no, 1.05. So let me put it, okay, it's still going down. It got rejected. Nevertheless, let's just do what we want to do. 5.75. So let's just use that. 5.75. I want to go into the market faster. I click on buy. Yes. Now it has bought. So now you can see we are in negative. Okay. We are already in negative. Can you see? We're already running negative. Can you see now? We're already running negative. Look at it. Why? So look at it. We're running negative. Let it come up. Let it come up. We're running negative of 0.75 because of the price of the coin. Like I told you that the volume, I hate jumping into a market that does not have volume. So it is crashing down the more. Now, there's something you need to read. Now, read this. It's going to write some things for you. Look at what it says. It's going to show you what we call liquidation price. Good. So isolated, it's showing us entry price. Look at our liquidation price. He's telling you, Felix, if the markets come down to 0.955, your account will be liquidated. What does it mean? That money you allocate to this trade, all the money will be wiped off. Because that is when the money is no longer enough and the market you say is going to go up has gone down against you. That's the risk. So with that, when you want to set stop loss for such trade, now you say your liquidation is 0.955. Let's go to this point and see. 0.955. Let's look at it. 0.955. 0.955 is already below here. 955. That's somewhere here. 0.955. Down here is my liquidation price. So when the market comes down to, so you can see that the market is actually, so as at the time we enter, 0.955 is going to be like 10%. When the market loses 10% of the current value of your entry point, your money is wiped off. So in your own case, maybe you want to save 50% of your money. You say, okay, you know what? You can take me out at 0.99. So let's see, 0.99. What percentage is that? So our entry from 1 point, okay, let's say our entry was at this point, somewhere here. So let's just take it from here. So look at it at 5%. So 1.0046. 1.0046. Take me out, because obviously you now say the market is crashing. But if you look at this market, it's crashing, right? And I always avoid the market that is not defining where it's going. It's not long, it's not hot, it's not cold, it's not hot. Be careful with them. So 1 point. So I'm going to go back. Look at how you edit it. Look at it here. See where you see pencil. Can you see pencil here? So for me to edit my take profit, stop loss, and all the like. See, can you see all of this? See all this point? I come here, see take profit and stop loss. Okay, look at it. So click on, can you see now? So you click on this, and then I'm going to what? So take profit. Where should be our take profit? Remember, when you enter here, look at it, while you are doing your analysis. Our take profit, let's take long. We actually enter at 1, so somewhere here. So you said it should take you out at this point. So let's see the risk reward ratio. $1.4. This is a bit long. Okay. So that means our take profit will be 1.1708. But in most cases, when I'm trading, when even the market is not respecting the region, I always take my profit before the previous swing high, which means my first take profit should be somewhere here. My first take profit should be somewhere here. That is 1.128. You can see it's in consonant with the other one. So let's go back to where we were. So the price. So let's go back to our market. I'm sure we're in profit now. So we'll say take profit should be 1.17. Let's go back there and check. We'll say 1.1708, okay? 1.1708. That's going to be 107%. That's when the market must have moved by 10% plus. So we'll say our stop loss should be 1.0046. That's about 40-something%. Are we good to go? Say yes. Okay, click confirm. Okay, confirm. So you have set your take profit and your stop loss. That's what you have done here. Okay, now let's look at the market. Then we are already in small percentage profit. So we are in about how many percent profit? About 2.5% profit. So what next am I supposed to do? Sometimes when I come to the market and I see that the market is actually going to change direction, and if it change direction, it may affect my trade, and I'm already in big profit. So if I already see that I'm in big profit, what I should do is simple. What am I to do? Very simple thing I need to do is, basically just come and close the trade. Okay, how do I close the trade? Very simple. You scroll over here, you will see what? Close long. Now, if the profit is actually much, and you know that the market is going to crash, you can click on what we call a reverse. So when I click on reverse, it will close in profit and now short the market following the new trend. So those things are meant for. So I've entered, and then it's open position. I say, okay, take profit and stop loss, like I said. That is how you set for long. Remember, we have bought the coin already at market price that time. We have bought the market at the market price that time. So that when the market price and on spot, I will place to sell. And then the same thing here. So that's how you trade futures Remember, we said all of these things we did mention. All of these things we did mention are type of trade, okay? And remember, I will say remove fear of loss. So it's possible I will lose, but I've already know how much I'm going to lose. That's what you are doing, okay? So now, so that's futures. Then low gems, spot trading, and all of that. You know, you buy low to sell high. We did that. And then synthetics and FX. That's another class. I will just generalize. So for you want to trade forex trading, you have to have a broker. You want to trade synthetics, you have to have a broker as well. So now to trade synthetics, the chart analysis of synthetic is different from the chart analysis of crypto and forex. It has a trading view different. It's called tradingview.derive.com. So this is like the chart. So I come in here. I think I set up a chart here. I've not. So I say, okay, I need to pick an instrument. So let me say I want to pick an instrument 75 S1. So I come in here and look at 75 S1, this 24-hour time frame. I want to analyze the market. So looking at even 24 hours, that is daily time frame. Can I have a downtrend? Can I have a trend line? So it's not going to give me absolutely what I wanted. Okay, this is not a good one. So what I can only set here is very simple. To identify the structure is to take my horizontal line, right? To take my horizontal line somewhere here. I always use a line chart to be able to get a proper turning point. Okay, take my horizontal line. Okay, another here. So I change it more thicker and then change it to black. I change this one to black. Okay, then make it more thicker. So I take again, see what I'm doing, horizontal support and resistance. Okay, I come down here again. Okay, then there's another very, very important point, almost the close time. Sorry, this video is coming longer than necessary, but this is not like a kind of ABC of trading. Now I've set all of this, so I go back to my candlestick, then go to 4 hours to check if I can have a trend line drawn of it, the trend activities. So now, can you see now? So I could have a trend line drawn here. How? Let's take it this way. It's just to connect at least minimum of 2 points. If I can get to 3 points, that will make more sense. Minimum of 2 points. Now, this is 2 points. This was a resistance that the market flapped down and got supported here, start bouncing. Now you get here. So you could expect the market was still going to touch here before going up. So this 4-hour time frame. So I probably want to save it so I can name it. Plain charts. So I click save. So I go to 1 hour. Now I'm not telling you, so I'm just doing peripheral for you guys. Now you can see this is a plain chart. Oh, I missed this market actually because I was following this trend of this market on my main chart. And then after this point, the market has recovered and then got stopped out here at but going to another lower time frame, this is 1 hour, the market cross, and then so at what point will this market start returning back? Of course, you can see that this market, the best I can wait is to wait for this market to come down here. If I take my fib retracement here now, you are going to see something. You need to adjust this guy, this setting. Don't worry, you may not be able to do this now. I'm just doing very fast one. Okay, so I take off this. The one I need are very more of my golden ratio, priming point. I make this one to be -2, minus. Okay, I take off the background, take off the price. Okay, what else again? So I reduce this color to be more lighter. Okay, so I click OK. So I've done some things. Okay, so now this is this point. So fib retracement, you can see that this market actually got into the priming point, right? From golden ratio to the priming point. So you can see that this market is going to come down. So when it come down, I'll wait for it at this before it will take up. So this is getting rejected. The next I'm looking for is that after this close of this candle, let's look at this. Countdown, I want to add it. The next hour, still have a long way to go. So, but you can invariably see this market is coming down. So let's go to 15-minute time frame so that you can see it properly. Okay. So can you see now? So you can say, practically speaking, that this market is what? It's going to come down, right? Perhaps back to this point or touching this trend line. You know, I use this trend line in 1 hour. So look at it. This is gravestone doji, right? It was already rejected at a very good point. So at this point, you want to short this market. So shorting this market, fib retracement is a very powerful tool that we use in trading. This is a swing low. So I take this guy here. I can trade with this only this thing. Okay, so let me take off this guy. Let me take off this guy first. So what I do here is ordinarily I box this point. Yes, rectangle. Can you see that? It's selling, right? Oh, sorry. This is actually a point of finding an entry or selling and looking for an entry, which is already responding for the market to come down. So I take this fib off. It has done the measurement we want to do. So then what we do is to come down here. I'll take my fib again and take up to this point. So I'm finding another point here, which another area of interest to be this 5. So this point to this point, take off this guy, will have done me some massive, okay, because I will have found an entry anyway, down to about 59 point. So once you come down here, I want to be careful. My stop loss. So if I'm selling, short the position, of course, as this happened, shorting from here, my stop loss here, and then my TP. So I take it down here. So this is my first take profit. This is my second take profit. And then if the chances are there for it to come down more, then that will be good. If it does not, no problem. If it's sliding back again, I'll ride it. Because this is actually like a continuation. The market continue to pull back and continue again to pull back and all of that. So this is synthetics indices, right? And for me to trade, so I set it here and all of that. So ladies and gentlemen, so can we take another instrument? Let's see, 75 normal. So, okay, 75 normal. Okay, wow, 75 is selling crazily. Now, this is 15 minutes, so I want to go to 24 hours to be able to mark. Do you get it? So you're able to mark point to point. Now, this is a bear market. If you look at the channel, right? If you look at the channel, let's go this way, channel. Okay. Where are you? Two sides. Okay, should be here. So this market, what do we call this? So it's selling, and then this is like a falling wage. So after much time, you want to find the market to break up and all of that. But break this point to go crazy and all of that. I'm not going detail about this whole thing. So, but this guy have been selling for a while now. You should be looking for an entry anytime, all right? So if I take this, the first thing is to look for support and resistance. So that I want to do. So, okay, so I think that should be enough, guys. So I didn't want this video to be too long, and that's how we trade. So let's look at our trade we open. If we are still much negative, can you see now? We're in serious negative. Can you see? We are in a serious negative. Okay. That's about, we have about 2%. Is it 2%? Okay, let's look at it. 8%, 8%. You know, I told you that the market, avoid a market like this because it's going to contaminate your trade. Can you see? We are in negative of 8%. But if you go to the chart now, you're going to see that it's a market that is not a lovely one. Can you see? Can you see? The market is not a lovely one. So can you see now? So because this is bearish, very, very bearish. So sometime if the market is now not favorable, you know, this is bearish. Like I told you that anything below 200 moving average is already bearish, and it was already bearish from up here and then continue, and then the volume was not reasonable. So if I go back there, so let me just check something properly very fast. Okay. Okay. So can see the FTM is not, there are no volume, it's just dialing because it got a support at 1.0334, another support at, once you break that support, it's going to cut off our money. So another thing I could just do, which is very risky, like I told you, guys. So this 10%, so you can say reverse. Can you see reverse? You're saying turn it to short. Okay? If you are saying short it, you will now take out your existing trade and change to another trade. So what should we do? So we change it. Fortunately, you know that this is a loss. Okay. So if we're to be on a long position, a short position, so whichever way, so but you already agreed that whatever thing happened, you are ready to take it. So let's continue what we're doing, right? Let's continue what we're doing. Oh, 10% has reduced to 10% has reduced to how many percent? To 6%. So that is that, and that's how you trade: buy low, sell high, and then work out your modality as much as possible. Okay? So please, you don't need to get confused about the whole thing. So Forex, the same way. So it's the same trading view we use for crypto that we use for Forex. Like you saw that I added Euro USD. Look at Euro USD here. I added Euro USD, and then Euro USD is doing its own job for Euro SND. No, 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 no. What I wanted to add was Euro USD. Okay. Okay, this is another environment. Euro USD. Okay. So this is Euro USD. Now, for people who are trading Forex now, Euro USD have been painting money since yesterday. A violent move. I traded it. After getting out of the market continued to trend crazily. So that's why sometimes if you're in the market, you want to monitor the momentum. And after monitoring the momentum, you can see powerful trade. Imagine if this trade were to be open and following the trend. Let's look at how many pips this guy will have done that yesterday. I think from here to here. That's about 93 pips. And you use one standard lot size. 10 times 93. That's $930. $930. Because it will have been, yes, 10 times, it will be 10 times 100. So that's just it. And so FTM, come on, let's go, guys. The guy is selling, so there's nothing you can do than to do this. We're in 9%, 10% again, so I switch it. See what's going to happen now. You have accepted loss, and then it should continue riding down. So we have accepted loss. That means you have changed over your trade from long to short and accepted out that loss, right? The only thing you didn't do now is to come and add your take profit and stop loss. So if you don't add it, it's still the same thing. So can you see now? So that's how you switch, just making your decision. So looking at it now, your stop loss can be where? So your take profits, let's look at it. Sorry, this is a bit lengthful. I'm sorry. I never meant to do that. Okay, let me just keep it at 1 point, where we kept that one before. So let's add it. Take profit, 1.0046. Okay, stop loss, 1.0. Zero 0.9. Oh. 0.5. So 13 times 2, 0.7. Okay, so it's still justifiable. So okay, so that is that. So we're done. So please, enough. And I told you, don't enter a choppy market. Once the market is not giving you correct trend, just avoid it and face a better market. All right, so thank you very much. And so please pay attention. Let's learn. Let's apply what we have learned. It's very, very important. Thank you. You want to learn more about Plan B Express, you can go to www.planbexpress.com and then get enrolled in a basic mastery class or advanced mastery class. Have a nice time.